Hello, and welcome to another episode of Blockchain Versus. I am Christina Bruhan, usually joined by my co host, Jeremy Bourne, but he's unavailable today. So I have the pleasure of interviewing Adam Blumberg. He's a certified financial planner, head of Chart Wealth Management, has a deep understanding of global digital currency, and also has a strong IT background. So has quite a few opinions on blockchain as a technology and really an expert in the fintech space. So without further ado, Adam, great to have you. Thanks so much for being on today.
Thanks so much, Christina. Great to be on.
Well, I'll just jump right in. It's great to have you. How did you get into the crypto space? Can you tell us a little about yourself?
Sure. The crypto space. I can go as far back as you'd like, but I am a certified financial planner. My business partner and I have a registered investment advisor (RIA) called Chart Wealth Management, based here in Texas. But a few years ago, I believe sometime mid 2017, which for most people isn't very long ago, but obviously in the crypto and digital asset space, that's a lifetime ago. My partner, Ron, every day he would tell me a little bit about Bitcoin or something he had invested in. And I kept saying, I don't even know what you're talking about, Ron. Kind of heard about it and seen news reports and everything else. And finally, I just started doing a little bit of research. I said, where do you buy this? How do you look at it? And he told me about Coinbase. And I went and looked at Coinbase and I said, Ron, do you know there's actually 3 of these on here? There's one called Ethereum and there's one called Litecoin also. And he said, yeah, I know. So that was sometime mid to end 2017 that I bought I didn't buy Bitcoin, I bought Ethereum. I bought Ether, I guess, because it was a lot less expensive, which coming from the background of a financial planner, I should know better than just buying it because it's less expensive, right? It's all about the percentage growth, not the dollar growth. But I bought some because it was less expensive. It immediately went up about 50% in the course of maybe 3 weeks. And I thought I was the greatest investor of all time. And I was going to be retired within a year. Preceded by some Litecoin, which also then went up about 30% in a week. And I thought, this is going to be easy. And then Ron said, there are hundreds of these coins. And I said, I have no idea what you're talking about. I don't even know what I just bought, except that it went up in value. And he pointed me towards Bittrex. And so I went and looked on Bittrex and I couldn't believe there were all these coins and I watched them going up and down. And he said, we can trade them. If we move our Bitcoin or our Ether over to Bittrex, we can trade these. And I said, you've got to be kidding me. And I started trading them. And of course, that didn't work out quite as well. But what it did was it made me research and find out, why are there all these coins? What do they all mean? What are they here for? And so I really had to get into the technology of first Bitcoin and then Ether and then blockchain. And I was fascinated, went down this rabbit hole, did all this research, was still trading them. Little bit of a humorous side note there is, sadly, this was at a time towards the end of 2017. I live in Houston, Texas. We had gotten hit by Hurricane Harvey. My house actually flooded. We got about 22 inches of water in our house during Hurricane Harvey. My wife and I decided to sell our house. We moved to a house we were leasing. Of course, we had the money from selling our flooded house plus insurance money. And here I am trading cryptocurrency using insurance money. I did not tell my wife about trading cryptocurrency at the time, to the point that when I would disappear for 45 minutes at a time, staring at my phone, trying to watch these coins go up and down, finally she confronted me and she said, are you having an affair?
She's like, what is this addiction happening right now?
I said, that's ridiculous. Why do you think I'm having an affair? She goes, you disappear for like 30 or 40 minutes at a time. The other day you went upstairs to change clothes and you were up there for 45 minutes. She goes, are you chatting with someone on your phone? And for a moment, the thought crossed my mind. I said, in my mind was, is it better for me to tell her I'm having an affair? Or is it better for me to say, no, I'm taking our insurance money and I'm investing it in fake coins from around the world.
Right. Well, in 2017, there was a lot more kind of drama happening too. So I'm sure,
Right.
I mean, she's like, "You're doing what?" I'm
Yeah,
sure.
I had to come clean, and fortunately, my wife trusts me very much. And I said, "Look, it's really interesting, and I'm not going to explain it to you right now, but this is really cool, and this is going to be really big." And after that, I went even further down the rabbit hole. I started doing more research on potentially security tokens, digital assets. I went to my first blockchain crypto conference or whatever it might be in Denver. And what I really realized was there were obviously a lot of people that were very into the crypto side, the technology side. There weren't nearly as many people interested in the business side of blockchain and how blockchain technology and decentralized ledger technology was going to impact the business world. And I thought that the way that some of these coins and crypto and digital technology in general is going to grow is when traditional business adopts the technology and adopts some of the underpinnings. That's when it's going to grow. And maybe we, being myself and my partner, need to really understand how that is going to work and help companies and people understand that. So we kind of went down that road. Now I'm much more centered on how is decentralized finance and all the technology tools that are available going to affect the overall financial ecosystem, right? Because DeFi, as it is right now, is kind of centered on the crypto enthusiasts.
Right.
But it has monstrous ramifications potentially.
I agree. And that's a huge thing to unpack. That's a great place to just jump right in the deep end. To understand the impacts, you have to understand kind of what I call the components of the fabric of global currency. There's regional impacts there. I mean, digital currency is not a new concept. Majority of the world's money is digital and moves around the world digitally anyway. But cryptocurrencies introduce the concept of peer-to-peer transactions, and that disrupts the global fee-based mentality. It changes things for cross-border payments. It changes, I love your point to, the operation side of businesses. Over in Europe, they're getting taxed every time it crosses over a border. So that's real interesting. But it can streamline everything from internal operations and the way that money flows through a corporation. And that's not even part of the financial planning and how cryptocurrencies operate in the market. I mean, if you look at the top 10, there's 4 equities, 4 behave as commodities. One is tether, which is a weird animal, and one is an exchange, which is a weird animal. So It's not apples to apples comparison. If you were going to explain to a layman just the major concepts so that we can then dive into how crypto is going to disrupt those concepts, can you kind of lay the groundwork for that?
The major concepts of what?
Of how global currency works.
How global currency works. The global currency is the dollar for the most part. But there's the problem right now is, and what you delved into when you talked about peer-to-peer finance and where cryptocurrency can fit into peer-to-peer finance, is the reason why there hasn't been a lot of peer-to-peer transaction in the past is because there is essentially a lack of trust around the world, right? And I don't mean that we just naturally don't trust each other. I mean, we need a good reason to trust each other. If I'm going to send you money for any reason, whether it's we're exchanging goods or we have already exchanged goods, or my company and your company have a contract that states that I'm going to pay you when I receive, when a certain container of goods reaches a certain point in the Pacific Ocean, any of those reasons for me to send you money, you and I better have some level of trust between us.
Agreed.
I
I'm
better,
sure
I,
that Nigerian prince guy is charming, but I don't want to send him money either. So there's
exactly,
trust and trustlessness, right?
exactly. And the, the, the way the global economy has grown and all the intermediaries that cryptocurrencies have the promise of, I guess, getting rid of, undermining, or lessening, they've all existed for a reason. And the reason is because we all need somebody to trust with our financial transactions. And that's who somewhat governments are. When you look at the Fed, they're an organization that we need to be able to trust, and they're there for a purpose. And the reason is because in the absence of something or someone or some idea to trust in the realm of our financial transactions and controlling of our money supply, it will descend into chaos. And we've proven it before. Humans really aren't capable of pure capitalism, because at our essence, there's going to be someone that wants to take advantage of other people.
There's the bad actors. Yeah. And I
There are,
definitely think that that's a global phenomena, right? There, if we could eliminate or highlight or make that transparent, and at least maybe the flip side first. I promise I'm a good actor is kind of like the first step, right? And if
right,
you have that level of trust, then there's unlimited things you can do with instant settlement and, the fundamental technology.
oh, sure. I agree. And what Bitcoin proved, the main thing that it proved is we can outsource that trust to code, right? And we can allow code take over that trust for us.
Correct. Because
And
it
once that
cannot be
happens, we
broken.
don't have, right, we don't have to have a person or an organization as an intermediary. We can have code as that intermediary, and it can verify and to some degree guarantee the trust, right? Because when you have an organization or when you have real people, you have human issues, right? And human issues are what cause the need for so many laws and regulations and intermediaries. And when we can take some of that away and replace it with code, then you and I don't have to trust each other at all.
Exactly.
I have to trust that that shipment of cargo made it to a certain point, and then my money, in whatever form that is, will get to you, and I will get my cargo, and you and I don't even have to know each other. We don't have to have any trust.
Exactly. It's
It,
right up there with you don't need to understand how the engine works in order to drive your car to the store.
exactly. I have no idea how my engine works. Quite frankly, I relate it this way. Most people have no idea how their email works. They just know it works, right?
True.
And then,
And
but I remember the time when you would send an email and then you'd call someone to make sure they got the email
absolutely. Or the fax, right? And that was the
or the
standard.
fax, right?
Right. I remember those days too. And now it's just standard. We do so much on, digital transactions, and it's just the standard now. The next generation, they have no idea what a dial-up tone is, right? I mean, that's like
Right.
archaic to them. And that's like the revolution of the internet in a nutshell. But this is so much bigger than the revolution of the internet. I mean, this is so much bigger. This is finance as we know it. And I mean, you're an expert. You do everything from help people grow wealth for retirement to planning to care for a child with special needs. With the bubble conversation, how do you advise a retiree who can't recover if there's a recession? How can they leverage crypto to plan for like a global financial impact? How do we stay ahead of this?
Uh, how do I help a retiree with the bubble?
Well,
Um,
I picked that specifically because, those are the folks who can least afford it. And those are the folks in my mind who were most hit by the 2008 recession is, I'm terrified to see it happen again. And you probably know a lot more about the factors that lead into that and how crypto plays in like the entire landscape.
right, and I've been doing a lot of thinking about that, and actually recently, when I say recently, I mean an hour ago, sent up a blog post on my new website about the future of the financial advisor. where I think crypto and to be more fair, decentralized finance, where that is going to play a factor in I think all of financial advising and financial planning, and in retirement in particular. It's going to be part of, I guess, what I'll call the fintech stack, right? So already we've been relying a lot more on artificial intelligence, on robo-advisors, on algorithms to help manage our investments for quite a while. That's where you've seen the advent of robo-advisors like Betterment and Wealthfront and Personal Capital, and some people might use Mint or Acorns or something. My feeling about this, and again, this is somewhat of opinion, is financial advice and financial planning and our planning for the goals like retirement are going to be able to be much more custom, but we're going to be able to be much more goal-oriented. And when I say goal-oriented, I don't mean the goal of something like retirement, because retirement is a very nebulous concept, right? No one's quite sure what retirement means anymore. Retirement used to be 65. I retired, I got a pension and a watch and sat on my porch and I fished and I traveled for exactly 17 years because everyone died at 82.
Right.
Right.
Statistically. Yeah.
Right. And those were all the statistics. Plus everyone got a pension.
Right. And that world just doesn't exist anymore. I mean, it's just everything is so different than it was even 20 years ago. The expectations are wildly different. People's ability to buy a home is drastically different. Just the entire financial landscape, the rules are changing.
Exactly. And the rules have changed. And ironically, I'm going to go back to what I said earlier, that people really are not capable of true capitalism. The reason why so many people now are not prepared for retirement is ironically because in the early 80s, with the tax act that happened in the early 80s, companies and individuals went away from pension plans and into 401ks because the individual employees decided we can manage our own retirement much better than a company can if they're managing for a pension. And so there was a shift in retirement plans away from pension plans and into 401ks. And the companies, the employers gladly threw up their hands and said, hey, we would love to not have to manage this pension plan anymore. We would love employees for you to manage your own retirement plan.
Right.
Have at it.
Right.
And the employees said, you got it. We're gonna have so much more money at retirement than you could ever give us. And they have failed miserably.
Absolutely. I'm terrified for the 401k industry. This is an entire industry that gives about a 4% return. And the rest of it is financing that industry. Like the other 96% of the money that's earned there is like they're jumping. I mean, you talk about bot trading, right? I mean, on 401ks, I don't want to get too into it because I'm not the expert here, but if the 401k landscape to me seems like a poor way to plan for long-term wealth.
The 401k, it depends on how you define the 401k industry, right? Because the idea of a 401k is fantastic. You can put away money either now pre-tax or post-tax into this plan, and it's safe. It is one of the earliest goals-based plans, right? The problem is, one, all the little fees that get taken out that most people don't even understand are getting taken out of their account. The biggest problem is behavior, right? Everyone thinks they're an investment expert and they're going to manage their own 401k so perfectly. And in reality, they're not very good at it. And that's why most people have not received the same gains as just the S&P 500. Because everyone thinks they're going to call the top of the market and everyone thinks they're going to call the bottom of the market.
Right.
And in reality, they're usually wrong about it. They usually cannot time it. The people who do best and who do actually relatively well in saving in their 401k plans are the ones who set it and forget it and literally just don't look at it for quite a while and let their investments go up and up. And part of that came about in the 99, 2000, and then in say 2006, 2007, when the markets were flying high, and there was a growth in discount brokers and such, and people, again, thought that they were going to be able to manage all their investments completely effectively and efficiently, and they weren't able to do that. So if we go back to your question about how is crypto going to help people save for retirement? I don't know if it's crypto in the sense of, my telling clients to invest in Bitcoin, which, by the way, I'm not offering any financial advice like that. But I think it's going to be in the realm of robo and AI and decentralized finance, helping people create more custom goals for what something like retirement might look like. And an example of that is I might have an idea that when I retire, I'm going to have to pay for my Medicare, right, every year. I'm going to have to pay a premium for my Medicare plus whatever deductibles and such. And I might calculate that, and I might say, okay, in my retirement, I know I'm going to have to earmark $30,000 a year for healthcare costs. I'm going to make sure that is planned for accordingly in its own little bucket, that it's going to be $30,000 a year with about 2 to 3% growth every year because of inflation. And that's going to be one bucket of money. And then I'm going to have another bucket of money, which might be my housing. Here's how much I'm going to have to pay for either my home or a rental or something. Here's how much I'm going to have to pay for my leisure, my travel, my grandkids, whatever it might be. And I'm going to be able to create very custom, bespoke buckets for whatever this nebulous idea of retirement is. And I'm going to be able to use technology like AI and robos and decentralized finance to effectively and efficiently manage each of those buckets in a way that my behaviors aren't going to be able to negatively affect it, right? I'm going to be able to say, how much money do I need to set aside for my healthcare bucket? And some technology is going to say, you need to set aside, $2,000 a year, $3,000 a year. And by the time you're 70, you'll be able to manage $30,000 a year for this healthcare bucket. And there's a way to make it guaranteed, right? So what it's going to come down to is not just this put away in your 401k or your IRA or some other buckets. And when you hit some mythical retirement age, you'll have enough money and you'll be able to pull for all those different aspects of your life. It's, here are all the aspects of retirement. Here's where you spend all your money, what your budget's going to look like. And you need to make sure that you have all those buckets sewn up, because some of those buckets go up in money, go up in value every year for inflation, and some of them don't. Some of them are guaranteed and some of them aren't. So does that all make sense? That might be a lot of my caffeine kicking in.
No. Well, I mean, it makes sense to me. I hope it makes sense to the listeners as well, but it certainly makes sense to me. Just my day job is basically bringing, Wall Street data to crypto and vice versa, bringing that crypto data back to Wall Street to put it in buckets and, have that set it and forget. Okay, I want to back in the day, you used to be able to go back in the day, whatever. I guess you can still do it now. Back in the day, right? But if you go, I want to go long on technology. Oh, this little fruit company, Apple, seems to be doing well. I think I'd like to pick the bucket that does that, right? So they just set it and forget it and go long. That's kind of what we're doing in the day job situation, which I don't like to plug too much here. So I follow you. I get it. I get really excited about it because it allows people to, I'm a super nerd. So anything like AI driven is fascinating to me. I do believe that we can make sure we don't develop Skynet and it's just lower level AI planning.
Right.
It's just math, right? It's like hashtag science, hashtag physics, hashtag math. I mean, it's just the basics. So that gives me the trustlessness to understand, the industry as a whole. But I mean, what gets you excited about cryptocurrencies? I mean, you have your day job, right? How does crypto kind of factor in? You see the landscape changing. There's infrastructure that needs to develop in order for your big dreams to come true. But how do you see that kind of evolving?
I am really excited about the incredible infrastructure being built for, I guess we'll call it DeFi, decentralized finance, but the ability to make and accept loans utilizing cryptocurrency and more importantly, utilizing smart contracts. And stable coins, things like DAI, some of the derivatives that are being created, the ability to, eventually tokenize or have some digital assets. That's all what is really exciting to me, because that's where we're going to see so much of this disintermediation that we're looking for from cryptocurrency. Because one level of it was the fact that I can send Bitcoin to anyone in the world anytime I want for virtually no fee, right? Almost no fee, and almost instantaneously, right? Relatively instantaneously. That's one level of decentralized finance and peer-to-peer. It's completely different when I make that person anywhere in the world a loan, when I loan them some money and have the full expectation that that they have it collateralized and are going to pay it back. And that's the next level. Even farther is when you take that wrapper of the smart contract that is able to create this decentralized loan, and you wrap that into, say, global shipping and trade finance, right? And now one company can still offer another company credit terms, but do it in a decentralized way, where you don't have to have money going back and forth between different bank accounts, right? You have those funds in smart contracts, and they can be executed and triggered based on, as I said earlier, some cargo moving from one point using GPS to another.
Which I think has to happen for operations. I think companies are going to have to innovate with technology, same way as brick and mortar companies have to evolve, right? These companies' operations, supply chain, to your point, contract execution, when it reaches a certain milestone, that all is going to need to be automated in order for them to stay competitive, right?
Oh.
I think that's one of the biggest things that I see the shift in finance and the adoption of really just blockchain technology. As you know, when companies move from centralized systems to decentralized systems, because it saves them so much money, that really, I mean, you can't argue with that use case, right?
Right.
I think that's when the rest of the humans go, oh, well, if they're doing it, then it must be okay. And now I can trust it as well. And it's really a shift in paradigms from like, I don't trust the centralized system. I can trust the decentralized system.
Right. Or it's look, the centralized system doesn't help me. Okay, because what we're going to see with decentralized finance is more investment opportunities for everybody. And that doesn't mean more investment opportunities that are incredibly risky. It's more investment opportunities that are actually pretty safe. Because if you look at the way the lending world works right now, right? If I want to keep my money relatively safe, I can go put it in the bank, right? And the bank is going to give me some ridiculously low interest rate right now to hold on to my money. But the bank isn't going to put my money in a stack of bills in their vault. They're going to go, all right, we're going to take Adam's money, which is essentially electronic because we're just making an accounting entry in our computers. And we're going to go lend that money to some other company who might need it. And the bank is going to charge that company anywhere from 5 to 12%. Well, I don't get the 5 to 12%. Exactly. I get the dual interest rate, and the bank is taking that difference, right? Well, if I now have the ability to go find those companies and not find them, if I have the ability to now make those loans to those companies who I'm fairly certain can pay it back, but I can do it in a way where some code or some other intermediary has vetted them for me and has some collateral there, well, I'd rather do that because I'd love to make 5% on my safe money. That would be awesome.
Right.
Right. And I'd love to make those loans. I mean, a great example. And look, you can have those intermediaries that don't even necessarily tell you that they're using any sort of crypto anything or blockchain anything. You know, a great example of this is Cadence. I don't know if you're familiar with Cadence.
I'm not. Please elaborate.
Cadence is awesome. Nelson Chu is the founder of Cadence. Their website is withcadence.io, and they allow you to make very short-term loans. So anywhere from 1 to 3 months. Although yesterday or last week, I saw they just came out with a 6-month loan. And what they're doing is they're allowing me to put in at a minimum $500 up to, I don't know what their maximum is, but for accredited investors, you can put in some money. And again, let me stipulate, as a financial advisor, I'm not advocating this. I'm not giving financial advice. I'm just telling you what they do. They allow you to, once you've gone through the KYC AML, you can put in $500 up to whatever their max is. And they will get a group of, in one instance, it was companies that sell products on Amazon and need some money for short-term capital, for working capital, right? Which means they might have sold a bunch of products and then need to go buy those products so that they can actually ship them, right? And so they might need 30 days of working capital. Well, Cadence is giving me the ability to essentially fund that working capital for them. And for that, I'm getting 9.75% annual rate of return. That's pretty ridiculous,
Dang.
Right? On a 30-day loan. It's the equivalent of 9.75% annual, and I can put my money in there, and I can see it every day. Now with Cadence, I'm giving them I'm sending them actual dollars from my bank account. Okay, and when I get the money back, it's in actual dollars. But behind the scenes, they're tracking everything using tokens. And what they've done is they've created this system that allows them to do that with a very small operating team, right? Because they can do all the tracking of it using tokens.
Mm-hmm.
And
that makes perfect sense.
I think it's brilliant. And where I see it's brilliant is there are so many of those companies out there that need that 30-day working capital. If they go to a bank, they're going to have to go through so much underwriting.
Yeah.
And it's going to be harder, and they're going to have to pay more for the loan because banks don't like to lend money to people who might, or, I don't want to say might or might not have a tough time paying it, but they don't want to lend money to these companies necessarily.
Yeah, they have risk management for a reason, for sure.
Right.
But Adam, really
days,
quick, sorry,
yeah.
I shouldn't interrupt you. I'm a terrible interrupter, sir.
No, please.
So you brought up accredited investor, which is a very big deal for me. So, running a startup, looking for investment, accredited investor, family and friends who are like, I'd love to put in 10K into a startup, but okay, you can't because you're not an accredited investor. So I think that tokenization of all things can definitely move towards lowering the barrier to entry so that anyone can be an accredited investor. It's the same philosophy that you could take your life savings and go put it on black at the roulette table in Vegas and no one's going to stop you. But anyway, we'll see if the SEC catches up to that. Point being, if you could lay out accredited investor, and that is a different animal, but most of the people I am trying to help educate are the folks that are not accredited investors. If you don't have a lot of money, what are some of the things that you can do to leverage to hit that goal of becoming an accredited investor?
Well, first, I will say that the accredited investor rules are kind of there for a reason, right? And they're there because the SEC and the government wants to protect the people who go, man, I would love to turn the last $1,000 I have into $100,000. Because when you have people like that, you have those that are going to prey on them and take their last $1,000. Now, you mentioned that you could go put your money on black at the roulette table if you wanted to, but you can't do that everywhere, right? You have to go to a casino to do it. So it's not like you can, from the comfort of your home anytime, there's not someone coming to your house trying to get you to put your $1,000 on black at the roulette table. You have to go out of your way to go do that. But what would I tell people who are currently not accredited investors is, one, the SEC is actually looking at new rules for what makes an accredited investor and what gives you the ability to invest in something that would normally be for accredited investors. And it might be where let's say you're in you're looking at investing it's something that's oil and gas related, and you wouldn't be an accredited investor by income or net worth standards, but you're actually an engineer in the oil and gas industry. Well, you might be able to invest in that by virtue of your knowledge of the industry. So it looks like they might add a knowledge basis to accredited investor. So in this world, it might be, well, for you, Christina, if you're an expert in cryptocurrency, you might be able to invest in something that is crypto related, even if you're not an accredited investor, if that makes sense. But what might someone be able to do is, look, anyone can buy cryptocurrency, right? And anyone can start building up their wealth and building up their net worth that way. Other than that, I mean, there's not a whole lot you can do. Now, you can invest in all sorts of different funds. There are all sorts of ways you can invest without being an accredited investor. The accredited status just gets you to, unfortunately, in this country, it's the rich get richer, and the rich get richer for a reason. It's because you have more access to more investment vehicles once you have more money.
And more education about those investment vehicles, for sure.
Exactly. Now, you also have the opportunity to lose more money in those investment vehicles. So, that's part of the downside. I field calls and emails every day from some company that wants me to pitch whatever their investment is to my clients. And my job is to sit there and listen and understand, is this good for my clients or is it not? And then I go to my clients and I go, hey, this might be a really great investment for you. Here's where it fits into your plan. But I have to identify which of my clients are accredited and which aren't.
I'm certain it's a nuanced evaluation. I mean, you probably slices of things apply in a higher weighted baskets than others. I'm sure that there's an art and a science to it.
Oh, there is, and I know, you and I met at a conference several months ago, and there were some people that get a little flustered when they start talking about how only accredited investors can invest in certain opportunities. But in reality, again, those rules are there for a reason, and they're there because it is not good for the economy as a whole for people to be losing their money on bad investments.
Just running around putting their money on black. Yeah, that's a bad idea.
Exactly.
Yeah.
So in the absence of those rules, you have pure capitalism, which says every single investor has to evaluate every investment on their own, and they don't have the time or the ability or the knowledge to do it.
That is a true story. Due diligence is no joke. It is so much more complicated than I thought it ever would be. I'm glad it's there. I'm glad that we get so many gold stars, but holy moly, that is no joke.
Oh, it is not at all. And I as a financial advisor, take that part seriously, which is when I see all these investment options that my clients can have, I want to really understand them and understand why they might work and why they might not and what the risks are. And
that's your reputation you're putting on the line.
Exactly. That's part of cryptocurrency also, right? Like I know whatever I know about it, I know for most people it's extremely risky, right? I don't mind putting my money into Bitcoin and Ether, and I'm probably using 12 different DeFi dApps right now, just kind of for fun, just to see what they're doing. But I wouldn't recommend that for anybody else.
I agree. And I also would say that I would consider you an expert in the space, at least very well saturated. You are marinated, Adam. You are marinated in the crypto space, meaning that you have a very deep knowledge of all of this stuff and the understanding of what the impacts are financially. So again, this show is not, financial advice, anything along those lines. I am a fan of the long-term tokenization play. You talked about the tokenization of data in the example with Cadence. I'm such a nerd for that stuff. So I get really excited about all of that. And it's one of my main, I mean, I have many things that many mantras that I shout about the cryptocurrency industry, shout it from the mountaintops. If you had, one or two things that the world had to know about this industry, what gets you so excited that you just want everyone to know, and why you believe in this industry?
I believe in this industry because it's really the natural evolution, right? It's taking the internet several steps farther than where it was before, but it's really a natural evolution of the internet and the interconnectedness that we have now. What gets me so excited and fired up is the idea of digital assets, right? It's the tokenization of assets, and then the steps beyond that. But what gets me excited now is I look at Twitter and LinkedIn and everything else on a daily basis, and it is growing so quickly. And it's a matter of a few people dipped their toes in a few years ago, and then we let the really, really smart people take over and figure out where to go with it.
Holy moly, that is no joke. I've never
Right.
met so many intelligent people in my life, and they're all sitting down at the table trying to crack really big global problems.
Oh, sure. And it's no different than, it's no different than what happened in the internet, right? Because in the mid 90s, there was the World Wide Web, whatever we wanted to call it. And I was in college at the time, and I used it. I downloaded Netscape because I wanted to check fantasy football scores. And that was the coolest thing ever, is that I could get my fantasy football scores right away. And then some dude named Jeff up in Seattle decided he was going to sell books. And can you just imagine?
Jeff.
Yeah, imagine the trust it had to take to be one of the first people to put in your credit card number on this computerized thing that took you 5 minutes to dial into, and expect that person, Jeff, was going to charge you $24.95 and actually send you the book you ordered in the mail, and it was going to be there in a week. That was crazy talk.
That was massive. That was massive.
And now we have Uber and Airbnb and self-driving cars and everything. And it's all because people started dipping their foot in, and we were going to figure out a way to go. Now, Jeff, for all his intelligence, did not see Uber coming. I'm quite certain when he sold his first book on Amazon, he didn't see Uber coming. No. So we dipped our foot into Bitcoin, which kind of proved that trust. And then Vitalik came out with Ethereum and said, hey, we can do more than just these kind of currency transactions. We can actually run software. And once one person's done it, someone goes, oh, I can take it another step and another step and another step. And what excites me most is the fact that I have no idea where it's going, that we can pontificate all day as to where DeFi and crypto and everything else is going. And I have no idea, except that I want to dip my toes in, and I want to be one of those people that is part of figuring out where it's going to go, and says, oh, I see a cool use case for something like Cadence or DeFi Prime or DYDX or Augur or one of these other protocols. I see a cool use case for it. I'm going to go figure out how to make that into a product or a company or a service or a decentralized application or something. I want to be one of those people that helps push it there.
Absolutely.
That's what's so exciting is, and the innovation is happening so quickly. And part of that is because we already have the interconnectedness. So you have teams that are working, that are teams from all around the world that maybe have never actually met each other, but they're creating a protocol or they're creating a dApp, and they'll launch it within like a month. It's crazy. And then you have, Compound and DYDX and Maker and everyone connecting their systems together. And all of a sudden you can have these intricate financial instruments that are moving around different protocols. And it's happening so fast that I can hardly keep up. It's dizzying.
That's one of my favorite topics is, the future of interoperability when everything, including data, is tokenized and can be moved across blockchains in a trustless, universe, right? Like that just makes me really, really excited. I definitely feel like fintech is going to be the first industry that's disrupted by this technology. But I am just beyond excited to see where the next 20 years takes us. So being on the front lines, I agree with you, the evolution of it, I feel there's a Darwinian flavor for sure.
Right.
And the fintech side of it is rather new to me. Like I've had a very steep learning curve. So it's been great to kind of chat and get, your take on it as an expert. We are going to pivot really quick to the lightning round. There is a series of questions that we like to ask our guests, and just knee-jerk reaction. If you feel there's a topic you really want to elaborate on, feel free to jump in. But just a little bit of fun here to wrap up the interview.
Okay.
Awesome. All right. Which country will adopt Bitcoin as their base currency first?
Nigeria.
Excellent. Do you think companies like JP Morgan and Facebook coming into this space are good or bad for the industry?
They are definitely good for the early part of the industry.
For the evolution. All right. Is Bitcoin ultimately a store of value or a peer-to-peer payment system?
Store of value.
Proof of stake or proof of work?
Stake.
Is Bitcoin undervalued or overvalued right now?
Not as financial advice. It is ridiculously undervalued.
Not as financial advice.
Not financial
ridiculously
advice
agree with you. All right. What is blockchain's biggest weakness?
Ooh, that's a tough one. Blockchain's biggest weakness is development for the sake of blockchain and not development for the sake of use. I
like that. Okay, that's a good answer.
Because when it comes down to it, blockchain technology is nothing but another iteration of database technology.
Yep.
Right. And so I'm a member, I'm a part of the oil and gas blockchain forum here in Houston. And everyone gets together. They're going to be really upset if they hear this podcast. But it's like a discussion about how great blockchain is and how we're going to utilize blockchain and everything else. And you go, all right, just, you know what? It's another database. And if your industry hasn't figured out how to effectively use the internet and databases yet, you're not going to figure out how to use blockchain. Right? It's not blockchain for blockchain's sake. It's how are you going to utilize the technology to make things better? Right. And that's the biggest problem with blockchain is it's a buzzword.
Ooh, even better answer. Oh, okay. Well done. That's a good one. All right. If there was one crypto that would eventually take over Bitcoin as the leader, which one would it be?
Oh, the easy answer is Ether, isn't it?
Only if you're looking at percentage of market cap, which doesn't actually indicate how the longevity event triggers and things.
Right. I think Ether, there's so much being built. Tezos might be up there.
Ooh, I like that answer. All right. That's a nice little Ferrari of a coin if you guys want to check it out.
I like digital assets. Yeah, I like digital assets. And they recently got listed on Coinbase, and they have a huge staking community. And I'm again, not financial advice. I like Tezos for the technology and why it's being built. And I just heard a podcast about Cadena, and that's going to be cool.
Ooh, all right. Nice little tidbits there. All right, we're almost done with the lightning round. So I love this one. Is Craig Wright Satoshi?
No.
Do you think an ETF will be approved this year in the US?
I hope not.
Okay, interesting answer. Do you care to elaborate?
There's no reason to have a Bitcoin ETF. It's silly.
It's too early. Okay,
It's not. It's not going to be.
Oh, just like ever?
It won't be approved. The SEC has said there's too much opportunity for manipulation and therefore that's why they're not approving an ETF. There's no reason to have an ETF, because if you want to invest in Bitcoin, go buy Bitcoin. You don't need a Bitcoin ETF. It's incredibly easy to buy Bitcoin. You don't need to be an accredited investor or anything. You need to be a person. Literally, like the only requirement is you have to be a person.
Technically, you could be a bot. I mean, you get equal opportunity.
You even have to be a person. Why? The only reason to have a Bitcoin ETF is so we can put it into retirement accounts. That's the only decent reason for it. Is because it develops a QSIP that then you can then put into 401ks and other retirement accounts easily.
That's going to be an interesting evolution, like to see if it develops fins or not.
Yeah, the whole ethos of Bitcoin is to disintermediate. So why are you going to add on an ETF that requires regulation from the SEC, and it requires some company to actually sell it, which needs to make some money, right? Just go buy Bitcoin, or go buy Ether, or go buy a set token that's got 50-50 or 75-25 or something.
All right, but
easier, and you don't have any fees.
But what if people want to buy like baskets? Those tools don't exist just yet. We'll talk about that offline. Okay, there's a tangent there. And for
I think there are baskets that I don't think you need an ETF for that.
True. ETF is okay. Yes, this is why we should talk offline. All right, very good. All right, last one. Over under Bitcoin at the end of the year, 20K?
What month are we in?
We're in August, almost approaching September.
I am going to say barely under.
Excellent. 5 years, over under 1 million.
5 years under.
Excellent. Well, Adam, this has been a lot of fun. Thank you so much for being on. Thank you for lending your expertise. If folks want to get a hold of you, how can they follow you out in the digital world? Out in the digital world. Wow. I have a Twitter account at AS, as in Stephen, Blumberg, BLUMBERG. We just launched our website, which is going to have a lot of videos and blogs and such, basically about decentralized finance and finance in general. And it is Interaxis, INTERAXIS.io. Fabulous. Well, thanks so much for being on. We look forward to having you back again, hopefully within the next 12 months with the next evolution of everything that's happening out in the fintech world. Adam, any last thoughts? I don't think so. I appreciate the opportunity. I appreciate your podcast and what you all are doing for the space. And I'm really excited. And I hope that, again, not financial advice. I hope everyone dips their toe in a little bit and sees where we go with it. Certainly worth doing your research. Well, Adam, thank you so much. To all of the listeners, if you want to hit us up, you can reach us at info@blockchainversus.com. Thanks so much, everyone.